Hello, welcome to the Froggy Five. I'm your host, Jim Fralick, founder and managing partner, Froggy Companies. And I'm here today with the man, the myth, the legend, John Azar. And I
What's
call him
up, Jimmy?
that.
Thanks for having me, man. I
Thanks for being
appreciate
here.
you having me on the show.
I could say a lot about John's background, but I'll start with he's really I would say my co-mentor. I say these days my mentor is John Bogdasarian because I worked with him day to day for a long time. But right around the same time that I met John Bogdasarian, um, I met John Azar, and John Azar has been the second most influential guy in my real estate journey so far. Very down to earth, but he has a breadth of background, and he took me under his wing a little bit in terms of understanding real estate um, before I was doing it even more than 20 hours a week. So I appreciate that, John,
No,
and I'm
I
glad we
appreciate
took
you,
the time
man.
to be
It's
on
been
today.
a great journey and a pleasure to getting to know you in the past few years, bud.
Yeah, so I'll tell people a little bit about you, and then I'm going to flip it back over to you. So he is the founder, managing partner of Peak 15 Capital, and he was co-founder of Boston Venture Partners. Before that, he was a managing partner for Mac Venture Properties with his brother, and large portfolio down in the southeast of properties. He's well known as a syndicator and an educator, and he speaks at a lot of conferences. He's well versed in it, but down to the brass tacks of where it matters. He's worked on like 1.8 billion. That's with a B worth of portfolios in the real estate industry. So John, at a high level, because we don't have all day, you're gonna have to tell me how you got from point A to B, like sort of where you got started, something to motivate people. Like I like to start the beginning of the week with Motivational Monday.
Yeah, yeah. No, I appreciate that. Everybody's journey is going to be different, man. I mean, what worked for me is not going to work for you. What's going to work for you is not going to work for somebody else. I mean, we each have to find our own path, obviously, and the path presents itself in weird and odd ways sometimes. I mean, it's the path to real estate kind of presented itself when I was working as a trader with Morgan Stanley on their equity high net worth desk, and we were working on we worked on this really large client that we were trying to secure debt financing for him, a bond offering. Actually, that's how big his project development project was. He was trying to develop one of the largest towers in Miami, actually in Key Biscayne at the time. That was 2004, 2005 timeframe that you're talking about,
Mhm.
and he was trying to secure over $1 billion even back then. Which was a lot of money. It's a lot of money now. It's a hell of a lot of money back then. So we worked on that project diligently for a long time, and it just didn't end up coming to fruition for various reasons. But we ended up meeting so many different people during the course of working on that project, and we ended up opening. That was the inception of Boston Venture Partners. After that, we kind of my two other partners and I opened up Boston Venture Partners, and it was basically a structured finance consulting shop. So basically, we were acting as investment bankers for large scale mixed use developments up and down the East Coast, and we even had a consulting gig in London for a project that was based there. So that was the entry into what sort of became now my career that I love and love dearly in commercial real estate. But I didn't know anything about commercial real estate coming into that. I mean, I got thrown from knowing everything about finance and the kind of the stock market, and obviously financial modeling. I knew about that, but I wasn't really applying those skills into commercial real estate per se until I sort of started working on that project. And then after that, when we launched Boston Venture Partners, which was really eye opening for me. And when I started seeing the money that was being made, because at that point, Boston Venture Partners, we were really not participating from an equity perspective. We were just strictly as acting as investment bankers or as essentially structuring consultants. And I was like, man, there's a lot of money on the principal side.
Mhm.
There's also a lot of money on the investor side, but there's a ton of money on the principal side and on the sponsor side. But we didn't really do anything about it until we kept the Boston Venture Partners until about 2009. 2008, we felt the pressure a huge amount, and then by 2009, it became apparent to us that was non-sustainable anymore to keep Boston Venture Partners going, because just everything imploded around us. Money just went sideways, and obviously for the recession of 2008, 2009. And by 2010, we just kind of shuttered doors, and we kind of went about getting healing our wounds and getting day jobs, and then I re-emerged back with my brother, in a platform that we started growing in the Southeast. That my brother started out buying multifamilies in the Southeast, and then I joined him and just kind of helped expand the platform, and kind of blew it out into more institutionally driven investors, and went from about 1,000, 1,200 doors into about 5,000 doors or so during the time that we operated the company.
That's a big expansion. So what kind of challenges did you run into, or what did you gravitate towards within the business? Who's like, hey, this is what I'm really good at, or that this area I have to really like work at. But they came together to obviously make a better John for the real estate world on the other side of that. Can you touch on that a little bit? Or
look, man, the thing I love about this business is I learn something about it every day. I mean, I'm constantly learning, because if you meet somebody in our business who tells you like, hey, I don't need to learn anymore, like, man, I don't know if you want to work with them, or, you might have some doubts about them, because I'm a consummate student of the craft. I mean, I love this business. And if I didn't love it, I wouldn't. You got to love it, because it takes a lot out of you. And this is not an easy business to be in. It's got ups and that will get you to the cloud, and it's got downs that will, make you feel pretty crappy. So, and the learning curve is not easy. The learning curve is could be steep. But if you love what you're doing, if you have the interest and you have the enthusiasm and the right spirit and the right approach to it, you're going to do great. And to me, the concept of learning was always intriguing to me, and learning and overcoming sort of, okay, so I don't know this piece. Why don't I know it? And does it intrigue me? And if the answer is yes, then let me look into it. And how can I learn more about this? And who can I learn this from? And let me surround myself by people who actually are in that, whatever that little piece of nugget that I need to learn, and download as much as I can, so that I can start effectuating whatever lessons I took from that into a real life business, or into producing some revenue, or generating profits, into whatever that is. I mean, that's my approach about everything, not just real estate, but obviously, my career has mostly been in commercial real estate. So it's, so that's really my approach about it. And then as we continue to grow, and then obviously have challenges and different setbacks and different, life is not linear. It's just not, maybe it's linear for, if you're a clock in, clock out kind of guy, and you work for, you're working for the government, God bless you. That's great. And that's, you're a 9 to 5 guy, and you just go in and you're looking at a stretch of working 30 years and then retiring and going to Florida for a golf course. That's awesome. That's awesome. That wasn't me, and that's still not me. And, I'm always looking for what else can I challenge myself with, and where's the next growth, and where's the next project that's going to, give me something to completely reshape the way that I think about the business. So if you have that kind of mentality, everything is going to be exciting for you to overcome, because then the lessons are, they could be sometimes scary, but they're also exciting. Like, learning something new is exciting to me. And I mean, through it all, the glue that holds everything together for me has been people. It's always been people, because I love people, and I love relationships. And that's really sort of at the center of everything I do on a day-to-day basis. I approach everything from a relationship perspective. We have the way that we run our fund now, the way that we kind of work with sponsors and operators now through our fund is everybody that works with me and at Peak 15 is, I tell them, like, it's people first, deals second. Deals always second, because you're going to have good deals and bad deals. But if you have someone that you like working with, that you have a great relationship with, that you trust, that is capable, that you have a really great sort of rapport with, you can overcome a bad deal. But if you work with somebody you don't like, and they're just not performing to where they are, or something about them is not right or something like that, you can have a great deal and it's still going to be a crappy time dealing with it. So
Yeah, I agree.
so it's always people, always for me is people before deals and before anything.
Historically, people were 30 years pension or whatever, right? The parents, people older than us, it was like, you're going to work, the company's going to take care of you, and then you'll have retirement, and then you'll go on a beach somewhere and sit and drink cocktails or whatever. And that was kind of like the thing we were fed as kids, kind of like a vision, right? But I
Sure.
think so many things happen where being a company guy, it's a bigger risk to me. Like I've always wanted to your point, and I think you agree with this as well, to surround myself with good people that I'm having good relationships with. Like I'll take a lower paying job as an engineer and consulting if I'm going in there and the people I'm dealing with every day are just, I can get along with them, right? I can learn from them. They're not on your back. They're not riding you. You're having a comfortable thing. And I think now on the real estate side, I feel the same thing, and relearning that lesson a little bit a couple times because yeah, well, sometimes you make compromises you shouldn't because you're like, this deal or this thing is so good. You really always have to each time step back. My wife and I have talked about this recently and say, are these people I want to be working with? And the answer
Yeah.
hopefully is
Yeah.
yes. If you have a choice between the two, always take the ones with the people.
Absolutely, absolutely, and you do make compromises. I mean, we make compromises every day. That's just part of life. I mean, everybody tells you I don't do compromises. I mean, that's just BS.
Yes.
You got to compromise.
Yeah.
But you just got to compromise for the right things. That's all.
Yeah, I agree. So John, I'm going to shift on you a little bit here and ask you about something not people, and that is because you said you're a student of real estate, you're always growing and thinking. So one area that I want to ask you about from your perspective, you see pretty broadly across the world of real estate. What do you think about the latest technologies, and are you leveraging any? And what do you see in terms of changes in the industry? And give me any real specifics that you can too, because I know AI always comes up, but like
Yeah,
anything you think of
yeah,
specifically that.
yeah. I think our industry is way overdue for a technological update. I mean, what we've been going through for the past 10 plus years has been certainly seismic shifting from because real estate historically have always been a old fashioned, somewhat of a, I hate to say it, stodgy industry. It's not, they're late adapters to technology, late adapters to, changes in implementation of tech tools. And that's been shifting in the past few years. And that's great. Because that is important, because technology will empower real estate owners, operators, companies into doing more and becoming more efficient, more productive, with less manpower and less time. Not just manpower, but time.
Yeah.
The technology that started being implemented and have transformed the real estate industry from a timing perspective. And that's a huge plus for me. I mean, the way I look at that, and we implement obviously technology in various ways. And you have technological tools to, you have databases for research on markets. You have a CRM database to manage your contacts. You have, you have a database to manage your marketing, maybe, or something like that. Now you're adding, in the past couple of years, you started adding AI tools that will help you maybe craft, outbound marketing or outbound reach outs and all of these things are great. Obviously you still have to have oversight to some extent. And, you're not gonna just, hand over your business to Terminator and have them, have them run the course. But at the same time, implementing and augmenting those tools, will save company a ton of time and a ton of resources. And yeah, sometimes it may not be necessarily about just human capital, but it will allow you to shift people in areas where they are needed more, as opposed to concentrating their attention to something that's more mundane that does not need to be handled by, expending man hours onto. A perfect example is something, like tools that you can use for possibly possibly management, or maybe even newsletters, sending out newsletters or something like that. If that's your job and within the company, I mean, if you use the right tools these days, you can cut your time in less than half from what you used to spend on that a couple of years ago. If you're using AI tools to do admin work, that will also kind of save money and time, and will allow you to kind of shift human power into other more needed areas in your company. Not necessarily to reduce your headcount, but it can, if that's what you want it to do, it can reduce your headcount. But if you don't want to reduce the headcount, it can also allow you to kind of reshift and reallocate where the most important aspect of human capital is needed, and that's on the sort of the things that an AI can't do.
Yeah.
AI can't assess relationships, can't build the relationships, can't really look at a couple of different spreadsheets and tell you, well, I don't know, the expenses on that is kind of high. I'm not used to seeing that. So it's not going to replace humans. It's just going to be an amazing augmentation to what we do on a day-to-day basis.
Yeah. Yeah. Well, that's a good point about the shifting of resources too. Like you said, not necessarily replacing, but it's not just cut your overhead. Hey, let me come in and help you cut people. With that kind of view, it's not necessarily. It's like, are you trying to expand? Are you trying to grow in another area, or do you just want to more efficiently utilize sort of everything you're doing here? As you just said, it's not. It's like using technical tools doesn't have to be. You're just trying to replace people in the very
Yeah.
cold
Oh,
way.
absolutely. I mean, listen, we use an AI tool for our properties to take inbound calls and return calls for possible renters. When they call
Mhm.
in, and it's on 24/7. It doesn't matter when they call in. So if it allows you the ability to also sort of be more efficient and capture more business without having the need of a human capital being there. So, and that, that implementing that AI tool, for instance, allowed us to pretty much have 24/7 concierge service for any possible
Yeah,
renters that would be
that's
calling in. And not only does it do that, but it also allows renters it'll send them a text message, it'll send them an application, and they can apply online. So, I mean, that whole process would have taken an extra 2 to 3 days, maybe even more, if there was a human factor involved.
I think people are getting a lot more efficient on the property management side and the leasing side, the virtual leasing. I think that's where we're seeing
100%.
the biggest side, the transactional side with title and stuff, other than like property and stuff. There's some few states where people are starting to make it more efficient. That's way tougher side when you're dealing with deeds and stuff is
It
lagging behind.
is. It is. But again, I mean, these are the areas that I just mentioned a little bit ago, where you don't want to give it up to an AI tool. You do want it to be handled by human
Humans.
capital, that kind of stuff. So
Yeah.
legal work, for instance, you
Yeah.
probably don't want your legal work to be handled by AI tool. You do want a lawyer to handle your legal work.
Let me ask you something personal related to technology, get a little more personal, and then I'll switch over to my next subject. But the in your daily life, time management's always been one of my challenges. Constantly recreating, relearning, remembering how I did it before when it worked. In sort of how you structure your day, and do you use any specific technology or techniques? Or if not, what do you how do you manage your incoming thing? Are you one of the guys like I? Certain times I don't pay attention to my phone. Like I won't take email on my phone. Most guys I work around are like crazy. Like you missed that. They just assume I saw it. But I know with the way my mind works, I can't. I'm working from a home office most of the time. I can't shut that off. How do you manage this in this world of that we didn't grow up in of like just information going back and forth?
Yeah, I think you hit it on the head right there. I mean, part of what you were saying is I think intimating to the idea of time blocking, which is a great idea. I mean,
Yeah.
that's an old school tool. That's not necessarily new. So,
Yeah.
time blocking is very efficient, where you dedicate a certain amount of time, and it doesn't have to be that long. I mean, for me, I sometimes dedicate even as little as 15 minutes to doing something like, I'm going to take the next 15 minutes, and you time it and you block it. And you can even have, I mean, if you want to be really really efficient about it, you can have a timer next to your, which I used to do. I'm going to go back to that actually, because I need to be a lot more efficient with my time right now and guarded, where you can have a timer. It says in the next 15 minutes, I'm not really going to be available for calls or emails or anything like that. I just really need to concentrate on looking at reports. The next 20 minutes is going to be concentrating on just returning emails. The next 30 minutes is going to be concentrating on maybe returning calls or maybe looking at market data or something like that. But
Yeah.
because look, man, we are, just like you said, we live in an age where we have so many different things coming at us from a technology perspective. It's so easy to get distracted and not accomplish what you're setting out to do. And obviously, I start out my day with a task list every day. So
Yeah.
and this is and my task list is pretty mixed. It's not necessarily like I could be more organized about it, but it's basically like the top 10 things I need to accomplish today. Within those 10 things that I need to accomplish today, I usually highlight the most pressing top 3 or 4 things that absolutely need to happen today.
Yeah.
And if I can't get to the other 5 or 6, then okay, I usually leave it open until the next day. So the next day I come in, my to-do list from the day before will pop up and say, well, you haven't finished these 3 items from yesterday. So those become the most important pressing items the next day. So for me to kind of knock them out.
That's great. Now I don't feel I'm taking a side read, like I'm not missing some huge thing. Me and John Azar are both basically approaching every morning the same way with our top 10 list, 3 or 4 of which. So I have to be reminded from time to time because I'll spin out and go. And I use a Kanban board and online tools, as you know, because I've used Reich boards and Kanban what I use as an engineer. But it's easy to get off track. I've trained my son. We use tickets, for ourselves, so priorities. But at the end of the day, it's really just another form of a list. Your good old fashioned, here's your to-do list
Absolutely.
and time
Absolutely.
blocking and the time blocking, right? Just time blocking. So it's good to
Yeah.
know that
Yeah.
it's not all about
I
technology.
mean, I'm old school about it, man. I mean, I know there's probably a lot more. I'm probably maybe the wrong person to ask about like using some highly efficient tools to organize your day and stuff like that. And maybe there are a lot of, but this is my tool for on a day-to-day basis. And
I love it.
For those of you who are not looking at video, I'm holding up a notebook that I handwrite in every day. So
That's awesome. So here we go, man. Here we go.
yeah,
Old
exactly.
school.
It's just an old practice from my trading days. I mean, that was one of one of my early mentors at Morgan Stanley. He was religious about documenting his day on his notebook. And not only about the top 10, but he's like, you need to make a note about every conversation, every aspect of what you're interacting, take notes on everything that you're doing, what you didn't do, what you didn't accomplish, and then go back and review them at the end of the day and say, oh crap, like I meant to I talked to this guy and I meant to actually mention this to him. Maybe I'll call him tomorrow and mention that to him. So, I don't know. To me, I mean, I guess you can do that on a computer or you can do it on a tablet.
Yeah,
You can do
no,
it on
I
your
think
phone.
it's still I think it's still pretty efficient. So I'm glad you gave me that nugget alongside the technology thing. I know they have like sometimes now I'm on meetings and AI people are joining, like the AI otter just pops up and they're getting pretty good at because voice recognition is so much better. So like I had a meeting last week and the AI bot, sent me an email and it summarized the conversation really well, including the action items. Whereas previous, I'm usually pretty skeptical about it, but it's so there are probably some efficiency around that. But let me I'm probably behind schedule and I don't want to take up all the rest of your day. So hit me with something that is a warning because you have a million of them, but share with our fledgling listenership something like relative to a real estate deal or even with syndication or whatever, like something that's gone wrong. So you need to be honest about it, right? Like something that's gone really wrong for you at some point and like what you took away from it and learn to improve on in the future. Could be
Well, there's always going to be something that goes wrong every now and then. I mean, I think what you do, the best thing you can do is take away lessons and adjust and admit that, hey, you screwed up. Like, there was something wrong that you could have done better. Maybe you didn't screw it up at the time that it was happening, because at the time it was happening, you probably thought you were doing the right thing. But eventually after the fact, when you do your after action reviews, which we do all the time, that's something I do.
Mm.
When you do your after action review on everything, you got to be able to be self-reflective and be a little bit more brutally honest with yourself and say, look, I could have approached this completely differently. And here's how I'm going to approach it differently. We had, even just as recently as this year, we had a deal that we worked on for a long time. And unfortunately, it didn't end up coming to fruition. It just, for various factors, it just didn't end up coming to fruition. The lender dropped the ball. Our co-sponsor dropped the ball. I mean, we dropped the ball maybe sometimes on some. I mean, there was, the seller dropped the ball on some things. There was the lender dropped the ball. The insurance companies, there was mishaps there. I mean, there's a variety of factors that led to that deal not coming to fruition and materializing. It sucks at the time that you're going through it. It feels like a crushing defeat when you go through things like that. But at the end of the day, look, man, if you go to sleep and you wake up and you breathe fresh air and you have a roof over your head, and you just gotta thank your lucky stars that you're breathing and on top of terra firma, and you fight. You live to fight another day. And then you end up going back and documenting what went wrong and how you can be more efficient, how you can do it. That deal that I just mentioned that went wrong for us early this year, kind of went sideways and didn't end up materializing that we wanted to. We took so many lessons of it. I mean, we took so many lessons that we actually kind of shifted the way that our fund allocates capital into deals afterwards, and how we now approach our sort of fund allocation with sponsors and operators, and how we partner with them. So it was somewhat eye opening for us, and it caused us to kind of shift. And luckily for us, it was not free. It did cost us, but it didn't cost us anywhere near as much as it could have costed us if we got into a bad deal. So
okay, well, I know. So, well, thanks for giving me that. And it's sort of, there's sort of some overall warnings and lessons there with it's more of an approach, I guess you'd say too. An approach with, I agree with you. When you wake up every day, if you got food, you're breathing at the end of the day, we're all heading to the same place, right? We're at least on our earthly time here, depending on what you believe. After we're all pushing up daisies at some point. So I always take that perspective if things are going bad. It's like, hey, we're fine. If our kids are fine, if we're all healthy here, let's pick up like people do after disasters, a hurricane or whatever. It's not a disaster. You just lost a deal. A tornado just didn't rip your family away from you, and whatever.
Yeah,
if it does,
no, absolutely,
people
exactly.
Bounce back from that. But
exactly.
But within that deal, without getting specifics on geography, people, whatever, is there something specific you can put a finer point on? You just said you learned multiple lessons and you changed allocation. Would you put that in perspective, like what somebody else listening could say? Oh, I take away, if I'm coming into a situation like this, maybe I should rethink it and maybe do it this way with my fund. Maybe even give me something.
Very specifically. So before that deal, the way that we structured our fund is that our fund is, we didn't talk about Peak 15 Capital that much. We run a fund. It's a co-GP fund. We essentially partner with sponsors and operators. And we come in on the GP stack. So we help them with the GP stack and the LP stack. So we come in on the GP stack from our fund. And we are always sitting on the GP side with them. And that's the whole concept behind the fund, is that we need to be on the GP side with them. And then we also our money obviously goes towards the LP stack as well. And then we bring institutional investors alongside of us to augment our investment, and then essentially take care of the LP portion of the deal, of this capital stack, of the equity stack. The fund we're launching next year is going to hopefully take care of both. And that's essentially the strategy behind launching our next fund. Our next fund is going to be an GP or LP JV type of fund, where the money is essentially coming. All the money is going to be coming from us, not from necessarily institutional partners that we'll bring alongside with us. But I'll give you the top 3 lessons I learned from that deal. The first lesson is always trust your guts. Your gut is such an important tool that a lot of people underestimate. They're like, it's because your gut is like you can't quantify it. It's not quantifiable. It's not easily quantifiable, at least. It doesn't, if you look on paper, things look great. or maybe things don't look great, but or whatever. But if you just go by the numbers and digits and figures and historical facts or whatever, that's not the same as trusting your gut. And trusting your gut is going back to what I said earlier in the conversation about sort of the whole thing about people and relationships and how important that is. If you are a relationship driven individual, or if you're a relationship driven company, the people factor is huge. It's important. It's more than just important. It's everything. And if your gut is telling you like, yeah, I don't know, there's something amiss here.
Yeah.
Listen to your gut and maybe not act impulsively, or maybe not act just based on what you see in front of you, just based on numbers and figures. Because trust me, the numbers and figures will change drastically on you if the people factor is not right. So, so that's one lesson. The other lesson is that you have to weigh where your at-risk money is going to be and when it's going to be injected, and you have to also you also, the biggest thing that we, I think the second biggest mistake that we did in that deal is that unfortunately we trusted the lender to, on their word that they're going to sort of be able to give us certain terms or be able to execute on certain things, and that didn't happen. So and that's something that sometimes you can't help that. I mean, that's just, there are some things. I mean, yeah, you can be careful. You can trust your gut. You can do all the things right. But at the end of the day, nobody's insulated from getting screwed in this business. Like, it just happens. It's just part of it. You have to be able to breathe it every day. That's just how it is.
I want to pause you there before you hit the third point on there, because that's for people, depending on, like I said, I don't have a huge listenership, but someday 1 million people will listen to this, John. They'll look back 3 years and say, so assuming whoever's listening to this, and maybe you're just starting, or maybe you haven't done your first 10 deals or whatever, but I think we're talking in there about, you get soft term sheets all the time from lenders, and it's a key part of the equation. Every time you're going into a deal, it's like, well, what does the lender say? Well, we got 3 people saying terms like this, and boom. And then you get money coming in, at-risk money, and you're placing equity. And then all of a sudden you go back to the lender and say, hey, now it's go time. You're doing your due diligence. What are we doing here? And most of the time, if you've done everything correct, you're going to somewhere land in about the same place. But then sometimes you don't. And this reason, and one thing I've learned from this is that go back to the same lending relationship. If you have a track record with a lender who has given you soft terms or said they're going to do something a certain way, when you can, go back to that source, because then you start getting reliability. Same thing with sponsors, right? You start getting reliability because some other people could come in and offer you great terms. And lots of people, if they're just looking at it strictly like, oh, why would I go here when I got terms over here? If you're in the soft terms, keep those relationships with lenders too, as you would with anybody else, because it's important. You have this business. What I've learned in my 5 years of full time with it is it's about trusting people again and again. Right. But go ahead. I'll let you continue because
no, absolutely. You're absolutely right. I mean, just because things didn't go right in this deal doesn't mean I'm not going to do business with that lender. I mean, that's crazy, because they're a huge lender. It's not like I'm going to axe them out and not do business with them. What it will do is give me a different approach on how I'm going to approach my deal and dealing with them the next time, and whether it's them or somebody else, the bottom line is that if there are certain risk factors that cannot be enumerated or cannot be resolved from day one, you have to be able to be very pragmatic with yourself to say, listen, if I get to this point in the deal and these are not resolved, I can't move forward.
Okay.
I can't take that chance of moving forward without these things being resolved or have 100% clarity, crystal clear clarity on them. So that's definitely part of that whole learning equation, is that you have to be able to identify the risks and identify what would be and know what can solve these risks for you. And if you can't do that in time without risking your money or capital or something like that, then maybe you should rethink the deal, because it does. No matter how good the deal is, if you can't close on it, if you can't own it, and and if you can't go across the finish line and start managing it right, it doesn't matter. It doesn't matter how good the deal is.
Yeah.
It's you're gonna end up in a bad situation. So so yeah, so these are the sort of the three lessons I took from that.
Tell me something that's gone great, and you've got a wide body of work, but like some kind of deal that stands out in your mind. It doesn't necessarily have to be the most profit or even the best deal, but something that like you, you hit on all cylinders, and like you really feel back when you think back about it nostalgically. You're like, wow, it'd be great to do a deal like that again, or that approach really worked.
Yeah, I mean, I don't. I'm trying to think. I mean, there's a lot of great deals that didn't necessarily start out as great deals, but ended up being great deals.
Yeah.
And we have a deal in Atlanta that when we took on, it was very heavy lift and opportunistic, and now it's fantastic. I mean, it's wonderful. It got us closer to with our property management company. It's awesome, and it's performing well, and it's almost like it's almost like seeing your misguided child grow up and become an outstanding citizen. So that's how I would equate it to. You know, we had other deals. I had another deal with my brother that when we sort of trying to sort of consummate it and get and put it together, and it was a broken condo deal, and those are infamous for being a little bit hard lifting just from a structure perspective.
Hmm.
And you have to kind of wiggle your way around different kind of levers and all that kind of stuff. But again, it ended up being a great deal, a fantastic deal, and and we're looking forward to it's still in our portfolio, and we have that deal's been in our portfolio for God 5 years or so more, more than 5 years, 6 years almost. So I mean, there are several deals like that where the fun for me is the deals that are not necessarily great from day one. I mean, there are a lot of deals that are not going to be great from day one.
Yeah.
But they will become great if you do the right things and if you implement the right things, and maybe some of the deals will become great shortly after closing. Some deals will become great a year after closing, or a year and a half, or maybe even 2 years after closing. It's okay as long as you're doing the right things, and as long as you're aiming towards the right end of what where you think that you need to be, and you need to be hands on everything that you do. You can't. There's no sort of set it and forget it approach in real estate. And if and I think right now in the next year is going to show the market is going to show a lot of those players who did play it that way,
Hmm.
meaning those inexperienced, a lot of inexperienced operators, or over optimistic operators who went way over their head on some deals, that they should have never owned to begin with, and their approach to managing those deals was to kind of set it and forget it and give it to a property management company and just trust that they're going to run it for them. I mean, no matter how good your property management company, you have to be hands on with your deal. You have to be hands on with your numbers. You have to know what's going on with your deal on any given day or week or month or whatever, like because it's endemic for you to know. You have to know those things. Those are not things that somebody, you can't give it to somebody else.
Yeah. Yeah.
If one of your investors or one of your lenders or one of your new contacts or relationships ask you like, hey, what's going on with this deal? Where's this? Where's your occupancy? Where's your economic occupancy? Where's what's what do you what's your default rate? What's your evictions? I mean, you got to know these things. And if you don't know these things, you're probably not as hands on as you need to be.
Yeah. That's a good point. So both your condo, because I'm going to make you say something specific, because you give me these, you're always dropping nuggets, but you've done so much. You give me a good general overview of sort of two, but with the condo one and the Atlanta one, they're both probably value add in a way, because I know that's
Oh
a
yeah,
lot of what
absolutely.
you've
Yeah, they're
done.
both value add.
Can you think, and if not, it's fine, we'll move on because we're going to wrap up here soon. But is there anything like when a deal's going in, either it gets stuck and because you've experienced it enough times, we're probably going to head into this stuck thing. Here's what we need to do. Here's some one or two things we need to try to get this unstuck, to get the occupancy up, to get the expenses down, or whatever it is. What's something that you've run into, and maybe you did both in the condo deal and the Atlanta deal, where it's not great at the beginning, but in your head, either you've put in enough cushion or something, a contingency ahead of time, because you know you run into that thing, or something that you hit something again and again, and you're like, I've seen this before, I've seen this movie before. Here's what we're going to do to get over this hump, and you've seen it work. So you know what I mean? That's a kind of really valuable nugget if you happen to have that.
I think I'm going to shift gears on you a little bit, Jim. I think the biggest things that you can do when you're stuck or when you are in a situation when you have to shift and change things to get over the hump on something is to admit to yourself that you're stuck or you need help or you need to kind of pivot and you don't know how to pivot yet. You need to be comfortable admitting that to either A, to yourself, and B, to someone else, and reach out and talk things through. And, and I think so many people are so afraid to look fragile or weak or not a good manager or whatever, but that's just BS. Like, just reach out, pick up the phone or meet with people. Maybe they're under you. Maybe they're not. Maybe they work for you. Maybe they're your students or something like that, or maybe they're somebody, someone that is much more junior than you or whatever. But if they can give you the right nugget for you to execute on, maybe it's something that you haven't seen and you haven't thought of that will eventually help you get over that deal, or help you course correct.
That's good advice.
Don't be so righteous about your where you are, what your status is, and don't look at reaching out for help as a weakness. That's not a weakness, because if you reach out to help with somebody else and you ask them, look, man, I'm stuck here. Like I got this situation and I don't know what to do. I'm running through ideas, but do you have anything, or do you know something?
Yeah, fair enough. That's a great approach. I love it. So if people want more of the gold nuggets that comes whenever you're sitting around a table with John Azar, I know you have an upcoming masterclass, so I'm going to let you go here in a minute. Right now, actually, you can tell people how to get in touch with you. You're all over social media, so I know that's one thing. But you also have some new masterclass coming up in addition to your new fund, right, or something like that.
Yeah. We're launching a couple of different new initiatives. We're launching an educational course, and a standalone educational course on multifamily syndication, acquisitions, management, capital raising. It's going to be an all-encompassing. We're really, really excited. We've been working on this course for a long time. That's going to be hopefully coming out in the next month and a half or so. And then we're also releasing a mastermind, a new mastermind. I'm not gonna ruin the surprises. We're going to start dropping nuggets about this mastermind. It's going to be a high-level, very sort of high-level executive mastermind for higher achievers and executives in the commercial real estate industry, to help them network and exchange deal ideas, learn about deal sourcing, capital, and as well as have fun. It's going to be integrated with a quarterly get-together component to it that'll be held in different areas of the country. So we're really excited about those initiatives. Obviously, we're still excited about our fund, because that's the day to day.
It keeps you going day to day. I love it, John. Thanks again for taking the time.
No, I appreciate it. I appreciate it, man. I appreciate it. Thank you for having me. And as you can say, I'm on social media. If anybody want any other questions or answers or anything like that, they're always welcome to reach out to me. You know me, Jim. I'm very accessible. I'm not inaccessible.
Absolutely.
So it's
catch up with you again soon, brother. Hey, thanks for having me on. If anybody else wants to find out more about what we're doing, please come to froggycompanies.com. Check out our 3 different business areas. We also have the Froggy Fund 1 that's now open for up to $18 million. We're going to be investing that $18 million across a diverse number of assets, cash flowing and ground up. And I'm really excited about this fund, and really confident that we can outperform most of the other people out there in terms of what we invest in and how we do our due diligence and the type of partners we put together. So it's great talking to you, and see you next time.